On the show today, Nigeria celebrates its 60th independence anniversary. And South Africa reopens its international borders for travelers today. OPEC oil output in September rises for 3 consecutive months. Hello and welcome to the program. This is Business Incorporated and I am Temple Ashaju. Happy 60th independence anniversary to Nigeria. The Nigerian Stock Exchange is closed today due to the 60th independence anniversary public holiday in Nigeria, but ended Wednesday's session positive by 0.83%. Meanwhile, at intraday market numbers in South Africa's Johannesburg Stock Exchange surged by 0.22%. And it's a similar gain in Egypt as the EGX30 advanced by 0.68%. Kenya, on the other hand, ended Wednesday's session in the negative territory. And in the Middle East, major markets we track were mixed actually at intraday, and Saudi Arabia's benchmark index rose the most by 0.31%, while the Qatari index was higher by 0.16%. In the UAE, Dubai's main index dipped by 0.34%, while the Abu Dhabi index slipped by 58 basis points. And European stocks advanced this morning as investor stock gained on Wall Street as the Pan-European Stock 600 climbed by 0.6% in early trades, with major bourses entering positive territory. We have more from Ashutosh Pandey, my colleague at the Frankfurt Stock Exchange. Hi Ashutosh, how are the European markets performing today, and what are the main issues on the mind of the traders and the dealers that are performing at the markets?
Well, yes, the sentiments here have been mixed. As you can see from the DAX behind me, there hasn't been clear trajectory there. But yes, the news about perhaps there could be some sort of compromise on the fiscal stimulus front in the US has given some hopes to the markets today. There have been talks that, there have been reports that perhaps Secretary Mnuchin could actually increase that fiscal stimulus plan of his to $1.62 trillion. And that's well below, still below the 2.2 that the Democrats are seeking, but still there are hopes that perhaps a deal could be reached there. Then there is some positive data coming from the manufacturing front. On the manufacturing front, you see that the PMI data are actually strong, and that's largely been driven by Germany, which has been seeing strong demand from its countries, importing countries in China and in Asia and elsewhere. So that's one of the things that's driving the market. But also weighing on the sentiments is the fact that the unemployment number across Eurozone did marginally go up. Now, these are signs of things to come. Perhaps in the first half, we did see many people drop out of the job market altogether. And what happens when they come back? So that's going to be a worry for the market. But yes, overall, it's been choppy trading today.
So we know that financial firms in the United Kingdom have now moved some 7,500 employees and some 1.4 trillion euros worth of assets to the European Union ahead of Brexit. And that's according to the report from Ernst & Young. But in all of these, the consulting firm says that Dublin, Luxembourg, Frankfurt, which are major financial hubs, have profited the most. Give us the backstory to this, Ashutosh.
Well, yes, exactly. And these cities have been benefiting because the financial firms are actually worried about what the future holds for them. They're not even sure as to whether they will be able to serve their customers on mainland continent the way they are doing now. They're worried that perhaps their ability would be restricted to a great extent. They'll have to seek some sort of a avoidance clearance from equivalence clearance from the EU, which basically means that the rules by which they are being governed in the UK are not putting them at any sort of an advantage when they are operating in the EU vis-a-vis their competitors from the continent. So these are the additional headaches for them going forward. Having said that, this report does not really have a lot of new revelations. I mean, it's something that we all have been seeing now for the past 4 years and reading about. Just a few days back, it was JP Morgan, which is reported to have been moving 200 billion euros worth of assets to Frankfurt. So that was a big catch for Frankfurt there. But there are other banks and other institutions, financial firms that are actually looking to set up base on mainland continent.
Or perhaps there'll be some sell-off of assets in London and possibly some mergers and acquisition in London as well. But Ashutosh, I believe that you know more and you have more you can tell us about this as to how it will speak to the future of London as a financial hub.
It's a little difficult to say anything on that as yet. It's too early. But yes, I wouldn't rule out London actually. I wouldn't say that London is going to lose its preeminence as far as its position in the financial world is concerned. We have to keep in mind that London is a global financial hub. Basically, only a quarter of its revenue comes from the European Union, so it's not going to lose that much. So the relevance, the infrastructure, the efficiency of the city augurs well for the financial firms, and that's the reason why they are there in the first place. And also, if you notice how many fintech firms are coming up in London, or how many of them already call it their home. So that's, again, it's very difficult to say if that's going to change drastically. You have to keep in mind that there were these fears at the time of the Brexit that many of these assets and many of these companies would move to mainland continent, but it hasn't actually happened at the pace that people were expecting. Having said that, we've got to be cautious because a lot will depend on what kind of a deal the EU signs with the UK, and that is going to determine the future of London as a financial hub as well.
All right, Ashutosh, thank you so much for this analysis. Appreciate them. Have a lovely day. Well, UK factories posted some solid growth in September, although not quite as fast as were recorded in August. But the United Kingdom's manufacturing PMI dipped to 54.1 in September, down from August's 2.5-year high of some 55.2 points. And that's well over the 50 threshold, which shows some kind of stagnation after a fourth month in a session, or in a row, I should say. But let's hear more about this from Juliana Olayinka, who joins us now from London. Hi, Juliana. Before we talk about that, let's begin with the Brexit issues, as the European Union has launched legal action against Boris Johnson's government over the breaching of the terms of withdrawal of agreements. What more can you tell us about these? Give us more as to the backstory to Chu.
Okay, so the European Union have delivered on their threat to take legal action against the United Kingdom with regards to breaking of this international treaty, the withdrawal agreement, which was called an oven-ready deal by Prime Minister Boris Johnson during his time campaigning for his overwhelming majority in the House of Commons. It's called the Internal Market Bill, and just earlier this week, it actually cleared its final hurdle in the House of Commons. But Ursula von der Leyen, the European Commission President, did say a couple of hours ago in a press briefing that they did give Britain up until the end of September to remove this new piece of legislation. And of course, Britain failed to do so. In fact, Michael Gove, one of the senior cabinet ministers here, said Britain could not and would not remove it. So they said they've been given no choice but to announce that they will be seeking legal action. They have given Britain a month to respond to that. We did actually have a statement from the UK government on that, saying that they will read the letter in full and, make a decision on what they will be doing. But as I said, the internal market has already passed through the House of Commons, so this is likely going to fracture any ongoing negotiations between Brussels and London.
Interesting developments there, Juliana. But how are the markets basically reading the tea leaves of these developments? You got Brexit, you got a purchasing managers index that's kind of slipped a little.
Well, it's doing well at intraday. The FTSE All Share is up 0.79%. The FTSE 100 is up by 0.71%. And the FTSE 250 is up by 0.27%. In currencies, the pound is down on the dollar by 0.62%, down on the euro by 0.79%, and down on the Japanese yen by 0.45%.
Right, now let's talk about the economy. The Office for National Statistics in its revised GDP says that the UK records GDP slump was slightly less severe than thought. But this again supports the Bank of England's Andy Haldane's warning against pessimism about the UK economy, which, of course, you and I talked about yesterday. Talk to us more about this.
Oh, we did talk about it yesterday, and it appeared to be a statement that was pretty much picked up by all of the press on the front covers this morning. Many of the media connoisseurs here were pretty happy with Andy Haldane, the chief economist of the Bank of England's sentiment. He was speaking on an online forum, and he said that he wants to see less pessimism, that the UK economy has been bouncing back. As you said, the ONS did revise Q2 figures, and I believe it went from 20.4 down to about 19.8% of a contraction. Andy Haldane predicts that in Q3 the economy will grow by 20%, and he wants to hear more of this sentimentism. But of course, there's truth on both sides, and the truth of the matter is over 780,000 people have lost their jobs since the start of the pandemic. The furlough scheme is coming to an end at the end of this month. There are concerns that there will be a mass of redundancies. And so on the one hand, yes, I think a lot of people are expecting more cheer, less doom and gloom coming from Downing Street. But the fact of the matter is that millions of people up and down this country have lost their livelihoods, and these new restrictions are making it more tougher for business owners to make money. But you did mention it yesterday, Temple, and I was thinking of you actually when I heard and saw it all over the press this morning that Andy Haldane's comments did indeed make the news.
True. Well, I know that the more we feed optimism, the more the chance we have for recovery. Let's hope UK gets some recovery, especially in the Q3, just as Haldane has actually projected. Wishing you all the best, Juliana.
Thank you.
Right, so Japan's market halted gains today after Tokyo Stock Exchange had a hardware glitch, while markets in China, Hong Kong, South Korea and Taiwan were closed on Thursday for mid-autumn and national holidays. Meanwhile, Australia's ASX 200 gained 0.98% to close at 5,872.90. And U.S. stocks futures rose today as investors braced up for the start of fourth quarter with hopes of a stimulus package. The Dow futures pointed to an opening gain of more than 200 points, while the Standard & Poor's 500 futures and Nasdaq 100 futures were up in the positive territory as well. The White House Chief of Staff, Mark Meadows, told reporters that President Donald Trump has extended an offer for more than $1.5 trillion in the stimulus. And now to the oil segment. For 3 consecutive months, oil output by 13-member organization of the petroleum exporting countries rose, pumping 24.38 million barrels per day on average in September 2020. And a survey by Reuters shows that the average is 160,000 barrels per day more than the August revised figure, and a further boost from the 3-decade low reached in June. Further analysis on the data shows that a restart of some Libyan installations and higher Iranian exports offset strong adherence by other members to an OPEC-led supply cuts deal. Libya and Iran are 2 of the OPEC members exempted from a supply pact by OPEC and allies, including Russia. And the pact has helped to boost prices in 2020 from historic lows in April as the coronavirus crisis destroyed demand. Now, gold prices gained slightly earlier today as a softer dollar and signs of progress in negotiations over fresh U.S. stimulus measures bolstered the metal's appeal. Spot gold started the new month on a positive note, rising by 0.3% to $1,891.10 per ounce after slumping to its biggest monthly drop in September, while U.S. gold futures inched higher by 0.1% at $1,897.30 per ounce. Silver also rose by 1.3% to $23.50 per ounce, while platinum hit a more than 1-week high of $904.45 per ounce. and was last up by 1.7% at $903.18 per ounce. And of course, palladium gained 0.7% to $2,321.70. As Nigeria marks its 60 years of independence today, President Muhammadu Buhari has re-emphasized the need for the country to unite and move Nigeria forward. In his Independence Day broadcast this morning, President Buhari promises to put the country's economy among top 20 economies in the world. He reiterated his administration's commitment to economic development through several policy implementation. Let's listen.
Fellow Nigerians, in addition to public health challenges of working to contain the spread of coronavirus, we have suffered a significant drop in our foreign exchange earnings and internal revenues due to 40% drop in oil prices and steep drop in economic activities, leading to a 60% drop in government revenue. Our government is grappling with the dual challenge of saving lives and livelihoods in face of drastically reduced resources. In this regard, sustaining the level of petroleum prices is no longer possible. The government, since coming into office, has recognized the economic argument for adjusting the price of petroleum. But the social argument about the knock-on effect of any adjustment weighed heavily with the government. Accordingly, in the last 3 years, we have introduced unprecedented measures in support of the economy and to the weakest members of our society in the shape of A, trader money, B, farmer money, C, school feeding program, D, job creation efforts, and E, agricultural intervention programs. No government in the past did what we are doing with such scarce resources. We have managed to keep things going in spite of the disproportionate spending on security. Those in the previous government from 1999 to 2015 who presided over the near destruction of the country have now the impudence to attempt to criticize our efforts. In the circumstances, a responsible government must face realities and take tough decisions. Petroleum prices in Nigeria are to be adjusted. We sell now at 161 naira per liter. A comparison with our neighbors will illustrate the point. A. Chad, which is an oil-producing country, charges 362 naira per liter. B. Niger, also an oil-producing country, sells 1 liter at 346 naira. C. Ghana, another oil-producing country, petroleum pump price is 326 naira per liter. Further afield, Egypt charges 211 naira per liter. Saudi Arabia charges 168 naira per liter. It makes no sense for oil to be cheaper in Nigeria than in Saudi Arabia. Fellow Nigerians, to achieve the great country we desire, we need to solidify our strength, increase our commitment, and encourage ourselves to do that which is right and proper, even when no one is watching. Fellow Nigerians, let us collectively resolve to continue our journey beyond the 60 years on the clear understanding that as a nation we are greater together than being smaller units of nationalities. By the sufficient grace of God, we shall come through any transient challenges. It is my sincere hope that by the end of this anniversary, on September 30th, 2021, we will all be proud of taking this individual and collective self-assessment for the progress of our great nation. Long live the Federal Republic of Nigeria. God bless us all.
President Muhammadu Buhari, Nigeria's president there. But of course, just as the president has referenced the petrol price remove, the subsidy on petrol, which has now been taken out, there has been reaction in the air. And since the announcement of an increase in the price of petrol and of course electricity tariff in the country, many have complained about the negative impact it will have on the price of goods and services across the country. Now, several business owners believe that this will bring about increase in the cost of items and, of course, harm their businesses. Let's listen.
Daniel Oyelesi, who runs a laundry business in Nigeria's capital, Abuja, is reeling from the double whammy of price rises for petrol and electricity imposed in recent weeks, which he says will harm his 2-year-old business. Earlier this month, Nigeria's president said the increases, announced 2 days apart in early September, were needed to bolster Africa's biggest economy, which for years has been urged by multilateral lenders to remove costly fuel subsidies and change electricity tariffs, both of which held prices artificially low.
It has not been easy for us. Before now, we used to buy NEPA like 22,000 or 20,000 respectively, depending on the kind of work we do, maybe in 1 month. But now it's just like 2 weeks I bought lights for 20,000. I'm sure the thing is not even up to 10 units again. So the charges is massive and it's not encouraging at all.
This barber also lamented price hikes that made him feel sick.
When we see that we can't buy more of these lights, we minimize the usage of the diesel. If we see that we don't have customers, we off everything. Even if there is light, we only on it when there's somebody we want to work on. That is the only way.
Nigeria's economy contracted by 6.1% in the second quarter due to the impact of the coronavirus pandemic and low oil prices. Africa's top oil exporter relies on crude sales for 90% of foreign exchange earnings. Last month, sources said a much-needed $1.5 billion World Bank loan was held up due to concerns over the implementation of reforms such as the fuel and electricity price changes. But galloping inflation, which the central bank expects to rise to 14.15% by the end of the year, is increasing costs for businesses and their customers. Analysts say this increase is the right time for citizens to hold the government accountable.
Well, it will impose a lot of hardship in terms of increasing the cost of production. But the important thing, I think the big picture is that Nigerians should insist on value for money. For instance, if you hiked electricity tariff and you said you are going to deliver 20 hours of electricity a day, let's hold them to that, because if factories get 20 hours of electricity, even at the new tariff, it will be cheaper for them.
With the way things are going, if government do not do something, we might forced to quit the business. But because you cannot be working at the end of the year not making anything, the main aim of this business is to yield something at the end of the month.
While many Nigerians say the increase does not help citizens cushion the effects of the coronavirus pandemic, others believe it's a strategic decision by the government to grow the economy.
And from West Africa, let's go back to South Africa now, where in South Africa, the government reopened its international borders for travelers from the African continent today in a bid to facilitate the free movement of people, goods and services from South Africa and the rest of the continent. According to the country's International Relations and Cooperation Minister, Naledi Pandor, travelers from all African countries will be allowed to access 18 out of South Africa's borders and must possess relevant travel documents while being screened for COVID-19 symptoms. Now, she adds that 35 border posts will continue to offer restricted services due to insufficient capacity for screening, testing, and quarantine. The minister adds that ships will be allowed to dock, load, and offload cargo, while crew members from the cargo ships will be allowed to crew changes after being screened for COVID-19 symptoms. And that's the show for today. I'm Temple Ashaju. Thank you so much for being a part of the program. We'll see you next time. Bye for now.